guys, welcome to Unisys Weekly Fundamental Analysis. So first of all, as usual, let's look at uh, the euro. All right. So the European Central Bank fears that borrowing costs will rise too quickly. Let's see. So the ECB on Thursday kept the target interest rate unchanged at minus 0.5%, raising economic growth and inflation expectations, but promised to keep the stimulus measures unchanged in the summer because of concerns that the current withdrawal will accelerate the worrying rise in borrowing costs and stifle the economic recovery. The central bank said it would purchase bonds at a significantly higher pace than in the first few months of the year. The ECB President Lagarde said at a press conference, "We believe that standing still is actually the right response." She emphasized that the central bank did not even discuss reductions, withdrawals, or gradual acquisitions from 1.85 trillion euros in pandemic emergency assets. The problem of excessive planning, PPP to asset purchase planning. Besides, the ECB purchased approximately 80 billion euros of bonds per month under the PPP this quarter, so up from approximately 62 billion euros in the first quarter. Thursday's decision still provides policymakers with some room to adjust the pace of bond purchases, especially in the summer when liquidity tends to decline. So next, let's look at the pound. So the pound is negative in two ways. So the increase in the number of new coronary pneumonia cases has increased the pressure on the pound, as this may delay further measures to fully restart the British economy. So the British pound has been one of the best performing currencies among the G10 this year because of the rapid vaccination in the UK is expected to quickly reopen the economy. However, these expectations have weakened in recent weeks as the numbers of infections with the Delta variant of the new coronavirus that have been detected for the first time in India has continued to increase, leading some scientists to call for a postponement of the reopening date. So if Johnson decides to completely lift the British blockade restrictions as planned on 21st of June, the pound may appreciate. If he decides to extend the restrictions, the pound will depreciate. The longer the delay, the more detrimental to the pound. So next, let's look at the safe haven yen. The Bank of Japan may consider extending the anti-epidemic relief plan. Okay, so the market predicts that, compared with other central banks, the Bank of Japan will maintain an ultra-easy policy for a longer period of time to achieve the 2% inflation target that it has been unable to achieve. So unlike the US and the Euro, where inflation is rising, consumer prices in Japan have fallen in recent months due to the country's slow vaccination rate and a response to the epidemic cooling spending and economic growth. Furthermore, the deputy governor of the Bank of Japan, Masaka Amamiya, said that if necessary, the Bank of Japan will not hesitate to further relax monetary policy. He also warned that Japan's nascent economic recovery is still vulnerable to the COVID-19 pandemic. So the Bank of Japan stepped up its asset purchases last year and implemented a loan program designed to help small companies with tight cash access to funding channels to ease the blow from the COVID-19 crisis. The Bank of Japan is currently in a dilemma. On the one hand, it needs to keep interest rates low to support the economy, and on the other hand, it needs to alleviate the side effects of long-term easing policies, such as reduced liquidity in the bond market. Alright, so coming up next is the forex calendar for next week. So as usual, remember to put your stop loss, as whenever there's news, the market will be more volatile. Alright, so that's all for today. Thanks for watching.